All right, so let's get started. This, by the way, is just a graphic of the alert service that we have. We have an alert service where we send out high probability trades, generally swing trades. They're typically going to have, most of them are going to be overnight on the alert service because of a lot of the folks in the alert service can't, of course, can't. The reason they're on the alert service is because they're working or they're not going to be looking at the computer all the time. So the things that we send out on alerts, we want them to have the opportunity to get into the trade and get out of the trade on a timely basis. But this is what it looks like. We call it the Compass. Compass is what the SPY super system used to be called. That was when it initially was created. It's been improved and changed quite a bit since then. But I still call it the alert service, the Compass alert service. But the SPY super system is actually what's producing this. Okay. First thing I want to talk about it. I think what I'm going to do first here is I'm going to show you the SPY super system on Thinkorswim. This is Thinkorswim. This is my platform here. This is what I show in the room every day. This is actually what the SPY super system looks like on Thinkorswim. You don't trade. I don't have to trade on Thinkorswim. I just trade off a Tradier actually. But this is what the actual SPY super system software consists of, and we're going to go over all these indicators. There's really just a few key indicators in how we trade off of 5-minute charts and off of daily charts. And it also comes with multiple scanners. This is a relative strength scanner, relative weakness scanner. This is a swing trade scanner for swing trades for potential longs. So, but this is what it looks like, and just so you can see it live here. And we'll get into this at the end. I'll go ahead and bring this up so we can take a look at some actual trades on here. Okay, so let's go ahead and go back here to the webinar. Now, first thing I want to cover, and I do this every webinar, so if you've been here before, you've heard this, but I want to talk about what actually moves the market, what's actually forcing the market to be bullish, bearish, trending, choppy. And we need to know what the market's doing to trade effectively. So the market is made up of two groups. These are the retail traders right here. This is traders such as myself, and I suspect everybody here in the room. And we're the little marbles. And this is the institutions, this big marble here. And we're going to go over in detail who makes up the institutions. But the important thing to understand is when the retail traders are the majority of the market right now, that if we don't have institutions in there in force, institutions are in there all the time, but they're not necessarily pushing the market one way or another. You'll have one institution be pushing stock up, another one will be trading it down. But once you get the institutions all pushing in the same direction, that's what we're looking for, right? So it's important to understand when the institutions are not in a trade, all right? And I mean, they're not pushing the trade in any particular direction. The retail traders are the ones that are in here trying to set a trend. Very important to understand. We as retail traders, we cannot move the market. We cannot move the market. We can't create trends. We can't break trends. All we can do is follow trends if there is one. So when we're in the market without institutions, what you're getting is you're getting a lot of chop and a lot of chaos. And what it means to us is when the institutions aren't in a particular trade, we don't want to be in it. We don't want to be in here fighting with these other retail traders for nothing. Basically, you're just going to chop around. We want something that's going to give us an edge. And that's where the institutions come in. The institutions are made up of 4 major groups. Investment banks, Morgan Stanley, Goldman Sachs, JP Morgan, Bank of America. This is the investment banks, and billions of dollars that they have. But institutions also are made up of pension funds, large pension funds, state workers, firemen pension funds, police pension funds, lots of pension funds with more billions and billions of dollars to invest and to trade. And then you also have hedge funds. Hedge funds, I'm sure you know there's hundreds and hundreds of hedge funds with more billions of dollars to trade and invest. So they're part of the institutions. And lastly, there would be mutual funds. And mutual funds will be T. Rowe Price, Vanguard, large mutual funds, more billions of dollars. This is what makes the institutions so powerful, because they have so much money that they can move the market if they want to, when they're trading in concert with each other, right? And that's what we're looking for with the SPY super system. We're looking to find out when the institutions are in force, pushing the market one way or the other, and when maybe the market has been chopping and now it's heading in one direction. The institutions are doing it. If they are, that gives us an opportunity to take a trade. All right, so this is what I want to make sure you understand. Without institutional involvement in a trade, it's very hard to make money because you don't have an edge. You don't have an edge over the other retail traders because, well, they're all trading the same junk. Okay. Now, this is a little bit off topic. I put this in a little while ago. People ask me why I did this. This is a blackjack table right here. All right, so this is an ace and jack of spades, nice blackjack, a couple of $100 chips. What in the world has this got to do with trading? People ask me why does this have anything to do with it? And the reason I bring this up is if you talk to any of your friends or your relatives about I want to be a trader, I want to trade options, I want to day trade, I want to swing trade, what they're going to say is you're just gambling. You're just gambling. You can't win. You can't beat the big boys. It's all fixed. You just can't. It can't be done, right? So is trading stocks and options gambling? And the reason I put this particular slide in here is when I was much younger, much younger, way back in the early days, I made my living playing blackjack in Las Vegas, in the casinos out there, and I was what was they called a card counter, general term for card counter. You're not actually counting the cards. What you're doing is you're keeping track of what the remaining composition of the deck is after the cards are removed for certain hands to see whether the deck is swung in the player's favor or in the house's favor. Like keeping track of the small cards as they're left the deck, like the deuces through the sevens, and when the big cards, the 10, jack, queen, kings, and aces are removed from the deck. And the mathematics behind this is as from the deck. In other words, the remaining deck has fewer small cards in it than it did when it was neutral. Then the advantage swings over to the player, and that's at that time when you're tracking cards, you can then increase your bets. Maybe play multiple hands. Instead of playing $10, you can play $100. It gives you an edge because you're trading with mathematically we have the edge in our favor. So by doing this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. So how does this relate to trading stocks and options? Well, trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. In essence, they're gambling. So if you don't have an edge, you're gambling. And you don't want to be gambling. You want to have an edge. One of the caveats about both of these, both playing blackjack and trading, since I've done both of these, both require discipline and emotional control. This is very important because if you've got a good methodology that is a winning methodology, in other words, it's going to win over the long term, but you are not able to maintain discipline and emotional control over yourself, it's going to be very difficult to make money because once you start trading emotionally or you start drifting away from your own strategy that you know is successful, you're obviously undercutting your own profitability. And the emotional control is really important. Emotional control is basically fear and greed. I mean, that's what drives the market, fear and greed. And if you're trading out of fear or out of greed, you're going to be making some very poor decisions trading wise. So that's why maintaining discipline and emotional control is critical, but it's no more critical than having a system that actually works. All right, so that's what we have here. So the way I look at it, the SPY Super System, which is the software that we use, it's our card counting system. It gives us an edge over the other traders, allowing us the ability to become consistently profitable. In other words, we know when the institutions are in there and we want to join them. Remember, we're not going to take any money from the institutions. We're taking money from other retail traders who don't have the same knowledge that we have. They don't have the same tools that we have, and they don't have the same strategies and methodologies that we have. So that gives us a huge edge over that, and that's how we make money consistently. So I mentioned that the SPY Super System, in conjunction with identifying the best high probability trades, can lead to consistent profits. Now remember, there can be multiple stocks that the institutions are pushing. All right, they're in there trading these upside to the downside. But you want to have other indicators that you check on and other criteria that you use to find the very best of those. So once you find 4 or 5 trades that the institutions are moving, then you want to find the best one, the one that's going to give you the very highest probability, and that's what we look for, and that's what this methodology does for us. Okay. hope that isn't too far off, too far of a tangent here. Okay, so in the room and in the alert service, I have a couple of tools to trade by. Trade the best, skip the rest. Sounds really, really simple. Who doesn't want to trade the best and skip the rest? Everybody does. The important thing is first you have to know how to identify the best. All right, and skipping the rest. This is the most important edge here. This means if we see a trade that looks good, but the institutions aren't in that trade, we're going to skip it. Now, will some of them work? Sure, but a lot of them won't. And a trade that you don't take, which would have been a loser, is just as good as a trade that you took that was a winner. It helps in two ways. A, obviously, it increases your profitability, and secondly, taking a loss has weighs on your trading mentality very badly. It's very difficult. Your brain basically interprets losses much more impactful on yourself than wins do. So you've got to have a high win rate in order to maintain consistency and also to maintain confidence in your own trading system, right? So that's why skipping the rest is very important. So we don't take a lot of trades. Our objective is not to make trades. Our objective is to make money. Again, another critical element here, because one of the biggest obstacles of most retail traders is over trading. They feel as though they have to be in trades all the time. Hey, Paul, good afternoon. They feel like they have to be in trades all the time. All right, and you don't. You only need to be. You don't really need to have 8 or 9 good trades a day. You need 1 or 2 really good trades. That's all you need. So our objective is not to make trades, it's to make money, and this is to try to keep traders patient and focused on only taking the very best trades. Okay, this is kind of important. Maintaining discipline means first you need to learn the process. You need to learn our criteria. Let me just answer this question, Kenton. Hey, can you ask how when the big boy, how do you know when the big boys are stock or index? And I'll show you exactly how we know that. And you're hearing people using the GEX or option levels. Do you watch those? I do not watch the gamma levels or any of those things. I'm much more interested in what the institutions are doing. And then we do trade options. So we're going to try and find the very best option we can. And there's obviously this option change that we go through, but I do not use the GEX or option levels. No, not to find the institutional trades. Okay, so learning and following the process, very critical, right? First, you need to know the process, and it's not that complicated. But then you've got to maintain discipline, which means you've got to stay in it. You've got to follow that. You can't be wandering off onto something that you heard on X or something that you heard on CNBC, or your brother's uncle's cousin called you and told you about this hot stock that he knows about. Here's a little clue. People that tell you what they think the market's going to do this week, next week, a year from now, all the gurus, they don't know any more than you do what the market's actually going to do. They have no idea. They get paid to tell you what they think it's going to do, but it's not going to help you in the least. Following the price action in the market and what the institutions are doing is what's going to tell you what's going on. Okay. And then remain patient. This is really, really hard for traders to do. I mean, it's so hard. I talk about this in the room all the time. You know, I have an expression called LPTE, low probability trading environment. When the market is choppy, it's a low probability trading environment. What that means is don't take any trades, or if you take any, make sure they're extremely small and you get out of them very quickly for profits. Right? Don't stay in trades very long. So remaining patient is very hard for most traders to do because they get bored, they get sidetracked, they start listening to other people, they start scanning through social media, looking for tips. That breaks the discipline. You're now not following the discipline anymore. Okay, so remaining patient, that means waiting for the stock to come to you to set up where it should be, off a support or resistance level. Okay, so as a profitable trader, we need an edge, obviously. We have 4 edges. A main one is we have the SPY Super System software. This is what tells us whether institutions are in the trade or not, right? Very critical. I mean, if the institutions, if I can't see that the institutions are in the trade, I'm not going to take it. Trading relative strength and relative weakness. Please don't confuse this with RSI. All right. relative strength index that you can put on your charts. This is not RSI. This is trading relative strength and relative weakness. That means when you look at a stock, how is that stock performing in what the S&P are doing right now, or the Qs, either one of those two indexes. If you've got a stock that's stacking green candles when the SPY is moving sideways or down, you've got a stock with relative strength. And vice versa. If the stock is moving down when the market's moving up, it's got relative weakness. If you want to take a stock, make sure you take one that's got relative strength or relative weakness to the market in the direction you want to take it, because it's going to give you a bigger edge. I mean, it makes sense. If the stock is moving up and the market's moving sideways, and then the market turns down, your stock, even though it might now start to go flat or go down, it's not going to go down as fast as the market is because it's got relative strength. So it's an extra edge. We want to trade with the market trend if there is one. If we've got a trending day in the market or a trending period in the market, then if it's trading bullish, we want to go long. If it's trading bearish, we want to go short. If it's trading neutral, in other words, choppy market, then we're just going to find the very best trades in either direction. And buying near support and selling near resistance, such an important criteria. Try to keep you from chasing trades. Once a stock gets too far away from its support level, or too far to the downside, it gets too far away from its resistance level, and you start to trade it there, you're getting in very likely near the high and near the low, right? And so now when it reverses and retraces back toward the support level, your P&L is going to be going redder and redder and redder. What you want to do is identify that stock, wait for it to pull back to a support level, and bounce off of that support level to confirm that it's gone back into the trend, and that's where you get in, because that's going to give you the person that took it when it was near the high, their P&L is going red, the stocks, they're freaking out, and you're sitting on there waiting to get in, and then it bounces off that, and as soon as you get in, you've got a profit on the trade very quickly. And if it goes against you, your loss is going to be tiny because you wait, you're going to get out as soon as it goes below your resistance level or your support level. Very, very important. And you hear this all the time, but I can tell you right now, a lot of traders don't follow this, because I see the trades in the morning, and I see when the stock starts moving up, and it's moving up very, very quickly from one of the support levels, like the VWAP or the 8 exponential moving average, and it's moving up and stacking candles. They can't take it anymore. They're looking at that. They think they're losing money, all right? And they jump into the trade. So what are they trading on right there? They're trading on greed, right? And then when it turns around and heads down and they can't take the pain anymore as it's going red, then they bail on that and they take a loss. What are they trading there? They're trading emotion. They're trading fear, okay? So you don't want to be trading with fear or greed, because it's gonna mess up your trading results. It's gonna mess you up. Your trading mentality is just going to get thrown to bits. Okay, so those are our edge. And the SPY super system, I'll go over this a little bit, but it used to be called the compass system. It identifies the highest probability trade setups while sidestepping setups that look good. We do that by identifying when institutions are driving the trade, when they're not. I'll show you how we know that. It does analyze some fairly complex trading data and displays the results in an easily identifiable visual format. It displays colors to let us know whether we've got institutions in the trade or not. And the fact that it displayed colors, it makes it possible for even new traders who are not familiar with technical analysis or candlestick setups. It allows them to see high probability trade setups that are there and when they're not there. Right? So it helps a lot for a newbie trying to become successfully, consistently profitable. It helps them to identify trades that at least have a potential to trade. Okay, so what gives us this edge? We only take trades that are being driven by institutions. I mean, I keep saying this. Trade stocks that have relative strength or relative weakness versus the SPY or the Qs, and trade in the direction of the overall market trend. Very critical. How's this give us an edge? Our trades will be supported by institutional buying and selling. We're in there riding the coattails of the institutions. That's what we're doing. The stock will be outperforming the index, the SPY, for example, and it'll be moving in the direction of the overall market. If you can do this, just these three simple things here, it's going to put you head and shoulders above about 95% of the millions of retail traders in the world. Okay. Now I want to, before I show the software here, I want to just kind of go over something. I'm going to show the software. I'm going to show the results that we've had trading the software over the last 4 years. I'll show you specific trades that we've taken, the percentage gains we get. and the we maintain it between an 85 and 90% win rate on our trades. So that's pretty high. It's very, very difficult to maintain that kind of a win rate. But I want you to remember something. The SPY Super System software, it's the critical element in finding and trading the highest probability trades. Right? This is what's driving our results. The SPY Super System software is the engine that drives our exceptional results. So when you see the results, remember, we wouldn't have these as good of results as this if we didn't have this particular piece of software. The ability to identify when institutional players are driving a bullish or bearish move and when they're absent is the key factor in pinpointing high probability trade setups. And this is the function of the SPY Super System software, and it's the critical component. Okay, and I do, by the way, have Rightline has a YouTube feed. I'm on I go on 11:30 to 12:30 around 11:30 to 12:45 or so every day, and you can go in there and get into YouTube. You'll see my room. I'm in the room from market open to market close. You can ask questions and you can see what we're talking about in the room for a limited period of time, because I'm answering questions and showing charts all day long for the other traders in the room. Okay. Quickly, I want to run through the most common mistakes retail traders make, because I want to see if you see anything in yourself that in these particular mistakes that maybe rings true to you, because I've made all of these. I made all of these. Not considering current market conditions is very important. When you're in a trade, whether it's a swing trade or a day trade, if you're in a day trade and you're looking at the 5-minute chart, you have to take into consideration what the market's doing that day. Is it choppy? Is it trending up? Is it trending down? It makes a big difference in your trading. Very big difference in your trading. Over trading. We talked about this. Number two. This is a big deal. This comes from boredom and basically just wanting to be in trades. Trading your P&L instead of technicals. This was another very critical one. If you're trading off your P&L, if you're watching your P&L, all right, when you get into a trade and you look at your P&L and you watch it go green, red, it's impacting your trading mentality. And I'll just give you an example. If you go into a trade and it's bullish and it moves up and you're up $300 in about 20 minutes on the trade, and then it starts to pull back, technical still set up nice, pulls back, and next thing you know, 20 minutes later, you're down $100 on the trade. All right, so you're just looking at your P&L, you're up 300, now you're down at 100, right? Now the stock comes back up again, and 20 minutes later, it's up $150, right? And then it drops back down, and now it's up $50, right? If you're watching your P&L now, what's going through your mind is, how can I don't want to lose these profits I've got. I'm not going to go negative again. I'm going to take it off. So you take the trade off of $50, not considering the fact that the technical setup is still bullish, and you probably should be adding to the trade right there, because you're trading your P&L. So you're trading fear and greed that's being created by your P&L. That's you want to trade just off the technical setups. If it's a good technical setup, you stay with it until it fails, or until you get to your target, your profit target, likely somewhere near the next resistance level. Okay. Trading what you think instead of what the price says. I'm going to show a slide on this. This is one of the things that really bugs me the most about people who lose money trading. Over leverage. This is obvious. Too much risk. When you get too much risk on a trade, you're trading with fear. Not using the daily chart for swing trades. When you take a swing trade, the first thing you do is look at the daily chart, trade in the direction of the daily chart. Please don't take a swing trade long if the daily chart is bearish, because you have no staying power in that whatsoever. Once it turns against you, you got to get out. Lack of patience, and we talked about this, very important. Forcing trades, that comes from lack of patience, feeling though I got to be in trades all the time. Attempting to pick tops and bottoms, another big problem for most people. Stock gets up really high, maybe puts a new all-time high or an annual high. They assume that it's likely going to turn around and head back down again. So they just pick the top. They don't wait for it to confirm that it's hit the top. They just jump in, picking tops and bottoms, another losing process, strategy. Not waiting for confirmation to enter a trade. Waiting for stock to break through resistance. Looks like it's breaking out. jumping in too soon. It doesn't confirm. It heads back down again. That happens a lot. This is one of the ways Heiken-Ashi can help you a lot, using Heiken-Ashi candles for confirmation of a trade. And fear of missing out. Again, this is greed. The stock's running away. It looks like it's going to keep on going. You pay no attention to the technicals on it and where the support levels is. You're just worried that you're not making enough money here and everybody else is making money. You jump in and you jump in and it turns around on you. And now you're coming in off of greed and you're getting out of fear. All right. Now, trading what you think instead of what the price says. And I want to say that this past year in April, the market was really gyrating all over the place based on the tariffs that were put on and then taken off. The market went way down and went way up. It was jumping around. But there was a tremendous sentiment in the market that the market, this starting in April, that the market should be bearish. It should be going down. A lot of gurus saying this, a lot of people that have rooms saying it should be bearish, it should be bearish. People were taking bearish trades. They were buying spies on the puts on the SPY. They were shorting stocks, assuming that the market should be going down. In other words, they were trading what they thought should be happening or what somebody told them should be happening. So they were thinking they were trading what they thought, but they weren't trading what the market was doing. The market went up from April to August. It was in a consistent climb month after month after month. So they were trapped in bad trades because they were trading what they think. The reason I mention this is a quote from Stephen Hawking, which I really like. And this applies to big time to traders. The greatest enemy of knowledge is not ignorance, not knowing what's going to happen. It's the illusion of knowledge. When you listen to somebody else, or you think the market's going to be bearish, even though it's going up because people tell you it should be bearish, or your interpretation of the economic information is that the market is going to turn around and go down, you're trading with the illusion of knowledge. You think you know what's going to happen, but you don't. So you're trading with the illusion of knowledge. So the greatest enemy of knowledge is not ignorance. So somebody who doesn't have any idea of what the market's going to do is in a lot better situation than somebody who thinks they know what it's going to do, and then they're wrong. And when you think something is going to happen, you tend to stay in it longer because you basically want to be proven right. And it's a killer to your P&L. All right, so that's a nice quote here, and I think it applies to traders very well. Okay, now within the SPY super system, we got four colors. We've got strong bullish. Anything is green is strong bullish. Anything is blue is a bullish trend. Usually it's moving away from a bearish to a bullish trend. Red is strong bearish, and yellow is a bearish trend. Right? Those are the four colors. This is what tells us what's going on our indicators. I've got two different layouts. This is the original layout that I had up until about a month ago, and we've changed it. And I'm gonna go right straight down and take a look at the new one. But this is what it looked like before I've added some things to it. But basically, it's all the same. Okay. That one here, this one here. We've got a bunch of these now. The updated SPY Super. This is what we have now. This is the one today. It's optimized for clarity and precision. I added the 8 exponential moving average to improve signal confirmation and trade timing for both entries and exit. This really helps a lot, and I use it all the time. I also eliminated some unnecessary indicators on the chart. Okay, so this is what the SPY Super System chart looks like. We have the, as you saw before this, over to the left-hand side, there will be scanners, but I enlarged it so you can see what's going on here. All right, so this is a 5-minute chart right here of the SPY. All right, what you've got here is, this is the actual oscillator that we use to determine momentum. Okay, this is what's called a modified Laguerre. Now, it's important to understand this is not a standard Laguerre. It's not a standard oscillator. It has the divergence stripped out of it. It just has pure momentum. Pure momentum is what this is showing you. So you can see the move between 0 and 100. When it's down here, it's bearish. As it comes up through here, it starts to go bullish. When it gets out, it's even more bullish. All right. Now, the colors on the current time frame momentum, and this on a 5-minute chart is going to reflect 5-minute times. Obviously, that you're going to have the 4 colors. Yellow and red is bearish. Green and blue is bullish. Right? Those are the 4 colors. It's always going to be one of those colors. But when you're trading an intraday trade, when you're not talking about a swing trade, when you're talking about an intraday trade, all you're going to use is the current time frame momentum along with the indicators up here. If you're taking a swing trade, you're going to look at the daily chart, and you're going to look at the current time frame momentum and the multi-time frame momentum. If you're going to take a trade long, the current time frame momentum and the multi-time frame momentum both need to be green or blue. They both need to be bullish. And if you're going to go short, they both need to be bearish. But on a 5-minute chart, when you're just trading intraday for 2 or 3 or 4 candles, you just use the current time frame. Right? So there's the current time frame momentum, multi-time frame momentum, long-term trend. For swing trades on the daily chart, it helps if the long-term trend is also in the direction you've got. But there are cases where it's not as critical as these are. These are very, very critical right here. All right. Now up here on a 5-minute chart, up here in the body of this, where the price is, you've got some significant indicators here. This is the VWAP, the volume weighted average price. And if you don't have the volume weighted average price on your 5-minute chart, you should put it on there, because all institutions use VWAP as an entry and exit level. They all watch that. All them algos are written to take advantage of that. All right, volume weighted average price. It's pink right here. Then I have 2 other indicators here, 2 other levels. This is a 15 EMA. It's actually a smooth 15 EMA. 15 EMA of a EMA. That's a smooth 15 EMA. And the white line here is the exponential moving average, the 8 exponential moving average. All right. All 3 of these are support and resistance levels. When we take an intraday trade, we're going to take them if they break above or break below one of these 3 lines. All right, that gives us our big on edge here, because we're getting in right near support, right near resistance, and you just wait till that happens. Now, if you're going to go long, for example, you'd want the current time frame here to be green or blue, and if you're going to go short, you want it to be red or yellow. And you notice on this time frame right here, you notice how it's bullish here as the stock's moving up and then switches to yellow right here. That's an indication that the institutions have gone from buying. Now there's more selling pressure now, and you see how it breaks down below the 8 right there and moves down to the VWAP, right? And now this becomes a support level, so you have to be careful, because you don't want to get in too close to support, because you don't have enough room to the downside. But those are the 3 support resistance levels that all the trades are based off of on the 5-minute chart. And on the daily chart, we use the 15 EMA as well as some of the larger moving averages, the 50, the 100, the 200. And we also have these pop signals. These are pop out of the box signals. These indicate a compression break to the downside when they're blue and to the upside when they're pink. They're breaking out of compression. How does that help? Well, if you can get a stock that's breaking down with a signal like this, it's breaking below compression. In other words, it's got a compression break, and it's breaking below one of your levels here, that it gives you a higher likelihood of success when you take a trade based on that pop out of the box signal. All right, it's a compression break. Just as we trade compressions to the upside, breakouts and breakouts to the downside below compression, that helps you identify that. And those appear on the daily chart and on the 5-minute chart as well. Okay, so those are our indicators. I'm going to show you a few trades that we've taken recently, so you can see how the indicators are used. This is a 5-minute chart. This is on NVIDIA. All right, this is a trade we took 1024. And you can see you're looking at your indicators here, and you're looking at your VWAP, et cetera, here. But notice that we don't want to trade a move like this. It's too, first of all, you're right above the VWAP. We like this one long. We wanted to go long on here, but we were waiting for a compression to break, right? So here you see how it's riding along the VWAP. Here's your key here. You see the colors? They're selling, right? Yellow, they're selling, boom. They go from selling to buying right here. The institutions are switching to buying right here. Notice what happens when they switch to buying. You get a pop out of the box symbol. We're breaking compression. The stock price is breaking up above the VWAP, above the 15, and above the 8 right there. That is a perfect entry for a long trade right there. Where's your stop? If it breaks below the VWAP, you're out. What are you going to do? You're going to ride this up as long as the stock keeps moving up along the 8 like this. Then once you get this, you see how it switches over here to flattened out, and you see what happens down here? Goes from buying to selling. You're out of the trade. That's the trade you take. That's an intraday trade off a 5-minute chart that is perfect. Perfect. As the institutions come in, you ride it, it stays green, you ride it up the 8, and then you get off right there. Get out there right there. Really, really a beautiful setup right there in NVIDIA. This was a SPY trade that we took. This was a short SPY trade. And I've indicated why we took this here. Okay, we wanted to go short. We've got buying here, and then we go to selling right here. Right here, you see how we get a breakdown below the 8, the white line, and the VWAP right there, the pink line. That's a break below there. Notice we got a pop symbol. We're breaking compression right there. So we take the trade right there because the institutions are now selling it right there around 10:30. We take it right there. We take it short. The 8 becomes our stop. The white line becomes our stop. If it breaks above the 8, we're going to get out of the trade, right? So we follow it down. We follow it down. We follow it down. And likely some people would have get out right here. I probably would have get out right here, even though it didn't close above the 8. But you're still bearish. You see how you're still bearish here? And even after this long period of time, you're still bearish. But here you're getting closes above the 8. So you're going to be out of it here. Even though it's still bearish, you're going to take your profits right here. Okay? That seemed clear to everybody how easy it is to identify these when the institutions are in and when the levels are telling you to enter the trade. Okay, this was another SPY trade that we took right here. You can see here that it goes from bearish right here, selling, to buying right here as we break above the VWAP right here. And right, I believe this is the same chart actually as the one I just looked at. Okay, and here's the Tesla trade, early morning Tesla trade. Tesla very volatile, but this was a nice trade first thing in the morning. It popped up here. You notice we go to buy, pops up, it goes above the VWAP. We can take it right above the VWAP, breaks out here. You could have got in here, you could have got in here. It pops up here to 307 right here, and then you get a red candle and a red candle, and it goes to yellow. You're out of the trade. Very quick trade, but probably good for about $250 a contract on the buys. All right. Screen's kind of small to see the overall picture, Ken. Yeah, you know, that's as big as we can make it on here. But again, I'm just trying to indicate because this is what you're going to be looking at. If you're taking a trade on a 5-minute basis, you're just going to be looking at the current candles, and you're going to know obviously what the market's been doing that day, whether it's trending or not trending. But this is what you look for. Okay, and here's the NVIDIA. This was a swing trade. This is a daily chart. All right, so this is a swing trade. So what does that mean? It means we want to have the current time frame momentum and the multi-time frame momentum both bullish, right? Which they both were. You can see the institutions are buying this thing. This is a daily chart, so this is daily candles right here. So what we took this was we waited for what's called a PBO. This is a pullback, a PBO or a pullback opportunity as the NVIDIA comes down right to the 15 right here and then bounces up right here off of it. That's what we took it. Now the VWAP, by the way, I'm going to have removed from the chart. This should not be, the VWAP is not effective on the daily chart. So, but the 8 definitely is, and we took it right there, and we get out right there, in here and out here, 32% profit in about 3 days on that one. Institutions buying the heck out of this thing, you can see. And this was SMR. This was another daily chart. This was a swing trade, right? Institutions. This was earnings right here. They were selling. They went to buying immediately right here. You take the trade right there. We were in and out in this thing. In at 513, out at 515 for 56% profit. 2,000 invested in that trade produced $1,150 profit. And I use 2,000 just as a baseline. I have to use some number to determine profitability by each month, etc. But that's what I use. Does the software say when to enter and exit? No, the software is going to show you the levels, and it's going to show you your support resistance levels. It's going to show you your indicators down here, but you make the decision as to whether you're getting in and out. Okay, it's not automated. I think, you know, to me, you watching these things, you with your brain, with your eyes and your brain, you can make really, really good decisions. And most of these things, I think, we know how volatile the market is. So you've got to take into consideration what the market's been doing up until that point, that day. Okay, this was Wendy's. This was another, and I'm just showing a daily chart. I want you to see that Wednesday's right here at earnings. It went from buying blue to selling red. We took it here. We were out right there. Right. So some of the trades we took. Okay. So what I just put these up here. Basically, this is just for fun. This is somebody who's trading without methodology, without the SPY super system, not knowing what the indexes are doing. Maybe he just took a FOMO trade and it turned around and started going against him. But what this indicates, he's trading with emotion, right? He's trading with emotion. Trading with emotion, and emotions is fear and greed, or revenge. Sometimes you get greed and you're going to revenge trade. Some trade didn't go your way. Now you're going to get back in. You're going to show them. You're going to make some money on it. This is what happens. This is what you look like if you've actually got a methodology that you're comfortable with, you're confident in. You're not going to win every trade. You're going to have some losers, but the losers are not going to impact you as much as other people, because you have confidence in the methodology that you're using, and you know that it's going to work long term. All right. Okay. Process precedes results. This is because I'm trying to point out not to follow your P&L, right? Once you learn the process, which is learning what creates high probability trade setups by looking when the institutions are in there and other criteria that we'll talk about, that's what you want to learn. This is what's going to make you profitable long term, is to learn this and follow this. Focusing on your results, your P&L, without having a solid process to follow will end in failure. And this is important because you can take a really horrible trade, a trade that if you looked at it on the chart and say, this is a horrible trade, you can still make money on it. And all that does is reinforce the fact that you should be taking these bad trades. And in the end, it's going to cause ruin. Right? So please don't follow your P&L or make a determination of how successful you are, how good you are at trading based on what short-term P&L is. It's not true. Right? There are a lot of good trades that don't work out and a lot of bad trades that do. But what you're trying to do here is you're trying to trade risk-reward over a long term. Okay. So here's a basic high probability trade setup funnel. This is what the process I go through when I'm looking for a trade every day. The daily and 5-minute chart need to align. And if this is a swing trade, I have to have the daily chart aligned in the direction I want to take. If it's an intraday trade, I don't really need to use the daily chart. But for anything that could be a swing, and when I say a swing, that can be 3 or 4 hours. If you're just going to be in it for most of the day, to me that's a swing trade. So you need to have your daily chart aligned. And then you find a 5-minute chart and align it to get your best entry into the trade. Okay, trade with the trend, both the stock and the market. If you have a trend with the market's moving up. You've got a nice stock that's moving up with a good bullish trend as well. That's the context of what you're looking for. You're trying to trade in the direction of the trend. Now, sometimes there isn't any trend. There isn't any trend in the market at all. Then you have to go with the stock trend, and that basically goes back to relative strength and relative weakness. SPY super system must align. This is a deal breaker. Anytime you look at a trade, if it's going to be a 5-minute trade, an intraday trade, and you're going to go long, that current time frame momentum has got to be green or blue. You can't take it if it's not. And if it's a swing trade, both the current time frame and the multi-time frame momentum need to be either bullish or bearish. Both of them. Both of them either have to be red or yellow, or blue and green for bullish. All right, they need to be aligned. They don't have to both be green. You can have a green and a blue, but they both need to be bullish. Right, and then you trade relative strength and relative weakness that we talked about, and then you try to enter near support and sell near resistance. This is important. So you have to wait a lot of times, but as the stocks break out, as you'll see through the VWAP and the 8 and the 15, that is support and resistance. That's where you want to get in. All right, so that's the process. Kind of go over quickly the strategies that we use in the room and on the alert service. Quite a few. It's important to have multiple strategies to be able to trade in multiple different kinds of markets. Markets have been very tough to trade in the last few months. Even though the markets are grinding up, it grinds up and then gaps down, and grinds up and then gaps down. Very difficult for swing trades because you're not getting any consistency. So we do straight calls and puts. Of course, they'd be calls for long, puts for short. I do straddles and strangles. Straddles and strangles is a non-directional trade. We are buying a put and a call, one above, one below, or one right at the strike, and you don't care which way the market goes or the stock goes. You only want it to move quite a bit, right? So I do straddles and strangles. I also do debit spread using weekly options expiration. This is important. When I take a debit spread, it's going to have the expiration of this week generally. I don't like to go out in time on those. I do time spreads over earnings. We just had a nice one this week on a time spread. I wish I could remember which one it was, but it worked very beautifully. Just had it the other day. Restoration Hardware. We had Restoration Hardware as a time spread. The Restoration Hardware, I get in, it was relatively expensive. I think I get in for $228 a contract. It was expensive stock, but that was a time spread. What I was looking for was to harvest the implied volatility crush when the earnings came out. Earnings come out, I get in again for I think 228, and I get out for 288. So not a huge gain, but about 25% profit overnight. And these are typically always overnight trades, which means they don't impact you if you're under pattern day trader rules, which means you can only take 3 round trip trades on an intraday basis every 5 days. I do what's called a weekly ATM strategy. This is a strategy where we sell puts against a neutral or bullish stock. We sell them every week. At the same time, we go way out in time, about 6 to 8 weeks out in time, and we buy a long put. We buy a put at a lower strike price to protect us in case the market, in case the stock turns down. And then we just keep selling puts every week, which right now we have on Coles, on KSS. This thing is in just 4 days is up about $70 per contract just on the first week, and we just sold puts for next week. These are very forgiving. They're very easy to manage. You don't have to watch them all the time. And then we do credit spreads to capture premium, because most everybody knows about credit spreads. And super system on the SPY, the Qs, the IWM, the futures. This is a trade where we're doing 5-minute trades, very quick trades off of the SPY super system. I don't call these out in the room. I'll identify them sometimes, but I can't post them and I can't send alerts on them. They're very, very quick. But a lot of people like these because you can get quite a few trades in a day off of this. And it's been working extremely well. I've been doing this since July of 2024 and haven't had a losing month using these trades. But I can't post them and I can't alert on them. So the results that you see that I'm going to show you that I had with these are my trades. People in the room may have better results or worse results. Okay, just to kind of quickly cover the alert service, this is set up for day trades and short-term swing trades. It's not an investment strategy. It's designed for traders who can't watch the market all day. It does put real-time alerts on the highest probability trade setups. And what are those? Trades when the institutions are in them. They've got to have the institutions in them before I put out an alert. And then we look for market internals, which I think I just got to show you that on the chart. We have a market internals indicator that tells us what the market's doing overall. When I say the market, I'm talking about all the New York Stock Exchange stocks, whether it's moving up, moving down, or sideways. Basically, it's looking at the total amount of volume on stocks moving up minus the total amount of volume on stocks moving down, and you either have a positive number, which is bullish, or a negative number, which is bearish. And then we look at technical analysis to find the best trades. Okay. Understand options is a training. I have some videos on options, and also I talk about it in the room all day long. People ask me questions all day long, and when we're going to take a trade, I go into very specific detail of the trade we're going to take, the option we're going to take, the strike price, how much you should pay for it, and the expiration date. You'll pick that up in time. Options are different than trading stocks, and you do need to understand those. But I have a video on it, and there's some really good information at the CBOE website on trading options. Okay, this is my equity curve for the year. I don't, but this is what they put in here for. This is what we've done this year, and I'll show you the results that we've had. This is based on 2,000 per trade. July was a huge month. Okay, now I'm going to talk now. We're going to get started. I'm going to talk about Heiken-Ashi candles here. Does anybody here? Is anybody here familiar with Heiken-Ashi candles and use them in their trading, or is there anybody here that's never even heard of Heiken-Ashi candles? Because we're going to talk about this, and I'm going to show you how the setups look and how to use them in your trading. And you can use them on 5-minute charts, and you can use them on daily charts. Okay, so trading using Heiken-Ashi candles. All right, so here is what looks like standard candlesticks. This is, it doesn't matter what this is. It says British pound, Japanese yen. Doesn't matter. It could be Tesla, could be gold, could be any it could be Microsoft, could be any specific stock. What we're trying to understand here is how you read these candles. than a Heiken-Ashi candles. They look like regular candles. Bearish Heiken-Ashi candles have flat tops. See this? No wick on the top of these. Flat top, flat top, flat top. This is a bearish Heiken-Ashi trend right here as it comes down. Right? No upper shadow, or what I call it a wick. Notice that the candlesticks start in the halfway down, or up to halfway in the halfway point of the previous candle all the time. They start like that because they're made up of two candles, right? So they always start in the middle of the previous candle, right? So here's a bearish Heiken-Ashi trend. Right now, if this particular case, if we were looking to go long this particular instrument, we'd be looking for what's called the Heiken-Ashi bullish reversal. We're looking for these bearish candlesticks to turn bullish, right? So here you see we start getting wicks and tails, and here's a bullish Heiken-Ashi reversal. See the flat bottom? Flat bottom candles are bullish Heiken-Ashi candles. So when you go from flat top candles to a flat bottom candles, it doesn't have to be one right after the other. You can have a bunch of dojis in there. That's a Heiken-Ashi reversal. Now, I'm going to give you a caveat here that's very important. When the trend that you're trading that's coming in one direction, when it has big candles in it, your reversal, you want to have big candles too. You want to have candles that are about as big as the ones that created the trend. This does not. This is a Heiken-Ashi reversal, a bullish Heiken-Ashi reversal, but the candlestick is too small. I wouldn't have taken this here, right? But it worked. I mean, you got 3 or 4 candles out of it. But what I'm looking for is a real serious Heiken-Ashi reversal. So it moves up, and then we have a bearish Heiken-Ashi reversal here. See the flat top, right? Then we go to the flat bottom. Here is your Heiken-Ashi bullish reversal candle right there. This is going back into the bullish trend, and look at the size of the candle. Right? That is what you're looking for. Now, a little tip on these candlesticks, because I get this question all the time: do I have to wait until the end of the candle is completely closed? In other words, if this is a 5-minute candle, do I have to wait for that 5-minute candle to close? And the answer is no. Once you're about halfway through, a little bit more than halfway through this particular candle time frame. So if this was a 5-minute candle, maybe 3 minutes into it, and if it was a daily candle, maybe by about 1 o'clock in the afternoon, if you've got a flat bottom, it's going to stay that way 99% of the time. Right? It's not going to reverse. So you don't have to wait for the candle to stop, to close. You could have taken it anywhere in here when you get in. And so here's your Heiken-Ashi reversal, flat bottom, flat bottom, flat bottom, flat bottom. Here's your bullish trend on this using Heiken-Ashi candles. You see how easy it is to see the trend. Now you're going to get out. You're going to get out right here. You're starting to get wicks and tails. Then you got a red candle with a big and wick and a tail. You're out of the trade. That's your trade right there using Heiken-Ashi candles. Okay. Okay. So the distinctions of Heiken-Ashi candles. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by flat top candles, followed by flat bottom Heiken-Ashi candles. Right? That's your bullish reversal. We look for those a lot. Bearish Heiken-Ashi reversals are identified by flat bottom Heiken-Ashi candles, followed by flat top Heiken-Ashi candles. That's how you're getting the reversals. And using them for reversals is one of the key elements of using Heiken-Ashi candles to find your best entry into a trade reversal. Okay. All right. And this, I'm not going to go over all this. This is what we just talked about. Here's one right here. You see how, let's say this blue line was the VWAP, or one of your support resistance levels that you wanted to get in at. As the stock breaks above the blue one right here, this Heiken-Ashi candle, that's a Heiken-Ashi reversal candle right there, and it breaks through your VWAP, for example, this is where you take the trade. And there's your trade all the way up, and then it turns around, it comes back down with a bearish candle, you're out of the trade right there, right? Nice trend, and you can see how nice how that moves. Okay, so there's the distinctions. Okay, so what's the recaps of Heiken-Ashi candles? What's the advantages of these things? It smooths out price action, reducing noise. You're not going to get as much when you watch the Heiken-Ashi candles. You're not going to get so much jiggling of candles up and down and up and down. It's easier on your mentality to not to get freaked out by using Heiken-Ashi candles, because you're missing a bunch of noise. It makes identifying trends much easier. It improves identifying confirmation trends and trend reversals. This is an important thing right here, trend reversals. And it helps identify potential exits when the candle body shrink or reversal occurs. Okay, all right. Let me just switch over here. All right. So see if you have any more questions before we move on. Kent, you don't use them. I like to see the action in the 1 minute bars. Yeah, I can show you. I'll show you some of that. I mean, 1 minute bars. I don't use 1 minute. All right, 1 minute is hyper scalping, and I don't usually do that. But let's see if you use the SPY Super System. Where are you using Heiken-Ashi? Well, I'm just on the Thinkorswim platform or any platform that you're using, but for the SPY Super System on the Thinkorswim platform, I just changed my candle construction from regular candlesticks to Heiken-Ashi. You can switch them back and forth. I'll show you how you do that. Okay, I'm going to show you some Heiken-Ashi charts here right now. I'm going to look at some live charts in a minute, but this is, I just want to show you, this is Uber from way back in 2023. But if you notice that on May 1st, I want you to look at this date right here. You see how the stock is coming down, it's bouncing off. This is my TC2000 platform, by the way, what I use for charting and for some scanning. But it bounced right here and bounced up on May 1st. Really tough to trade these gaps like that. So let's take a look at it with Heiken-Ashi candles. Here it is on May 1st right here, Heiken-Ashi candles. See the Heiken-Ashi bearish trend right here? Flat tops all the way down. So you get a Heiken-Ashi reversal candle right here. See how big this is? Bigger than these candles. This is the candle you would get in on for the day, for a swing trade. That's a daily candle right there on May 1st. That's where you would enter the trade, right there. And then you would have had another big flat bottom candle, another one. This is the trade you would have been in. When you would have got out right up here as it starts to flatten out. And this is May 1st. So this is where you would have got in on May 1st, all right? This is where you would have taken the trade off of Heiken-Ashi candles right here. You would have caught this whole gap. Notice there are no gaps in Heiken-Ashi candles. It takes two candles to make one. One of the regular candles, gaps disappear. So you get much more smooth price action that you can see here. All right? Okay, so I'm going to look at some Heiken-Ashi reversal candles. I'm going to do it on TC2000 as well, and I'll show you some in the off of the Thinkorswim. But on here, I'm going to show you just a few trades and how that worked. Right. So what I'm doing here, this is CCK. This is my TC2000 chart. But I've got this set to Heiken-Ashi right here, and if you look at CCK here, you can see that the stock has been kind of drifting down, but it puts in Heiken-Ashi reversal candle right here. So this is a Heiken-Ashi reversal. This is one you'd be looking for on Monday to take it long if it's opens green and moves up. All right, on CCK. Let's see, what's this one? LNTH, I think. But yeah, LNTH. All right, so this is another nice Heiken-Ashi reversal candle. This is actually what's called the Heiken-Ashi continuation, right? Because you're in a bullish trend right here. See the Heiken-Ashi candles? And then you flatten out, and then you get another Heiken-Ashi reversal candle right there. This is a nice bullish candle. If I look at the regular chart on this, with regular candles, that's what it looks like. All right, notice the gap is gone. But this is a beautiful Heiken-Ashi reversal candle to enter a trade on Monday if it continues on up. All right, I got a few that I wanted to show you. This is UNH right here. Looks good. Heiken-Ashi reversal candle to the upside after being in a downtrend for a while. Nice look on that. There's the actual chart. And Travelers, TRV. Travelers, another nice Heiken-Ashi reversal, right? Flat bottom, flat tops, starting to reverse around and head back up the other way. And they work on bearish ones as well. GoDaddy, because right now is a Heiken-Ashi reversal to the down. Whoops, that's not it. GDDY. All right, so here's a stock that's been chopping around. Here's a Heiken-Ashi reversal. Notice how well these work. Here's the Heiken-Ashi reversal to the downside, continues on down. Heiken-Ashi reversal just starting right now. So we'd be looking for a downside move in GoDaddy off of this chart right here. And it's in a downtrend too. The whole overall trend on GoDaddy is bearish. You can see how bearish this thing has been. All right, so this is a nice setup. And here's the regular chart right here. This is what you're doing. You're breaking down below all your moving averages. Again, this is my TC2000 chart on this. And also Shell would be another one, SHEL. Right, another Heiken-Ashi reversal candle right there. Or it's actually a continuation to the downside. Okay, now I want to show you on the SPY super system. I want to show you some of these. And I'm going to switch this over to the daily chart. All right. And by the way, and think of swim, here's style. If I want to change my candlestick type, I just go to candle chart type. I go from candle to Heiken-Ashi. That's all. These are all going to become Heiken-Ashi candles now. That happens to be the ES right there. So let's take a look at the ones we looked at. We looked at CCK long. All right. So here's CCK on here. All right. Now, it looked great on the TC2000 as a nice Heiken-Ashi reversal candle. But let's look at something here. And this VWAP should not be there. This is going to go away. But notice down here, even though this is a Heiken-Ashi reversal to the upside, look at what your indicators are telling you here. Okay? Because your current time frame momentum and your multi-time frame momentum is bearish, this is telling you this stock is bouncing, but it's not bouncing because of institutions. It's bouncing because of retail traders. This is not likely to continue. You've got to have these things go bullish if you're going to take CCK, so you can't take it, right? LMTH, another nice Heiken-Ashi reversal candle. Looks good, but look at this. We still got yellow here. Now, one of the things, this was green, which is important. This is multi-time frame. This is current time frame. But when I look at the Laguerre indicator here, even though this is yellow because the thing is just drifted down ever so slightly, I would still take that just because of the Laguerre here is not really moving very quickly. So I would suspect this is going to go right back to green. So if this opens green on Monday, I would take it because this is likely going to switch to green. But I have to use the SPY super system to tell me whether I want to get into these trades or not. So it's important, though, even though the Heiken-Ashi reversals, you've got to have some confirmation, which you do not have on UNH. UNH is also bearish right here. Can't take it. Bullish on the current time frame, bearish on the multi-time frame, bullish on the current time frame. So this is one that I wouldn't be able to take. So that's how I hone them down to the ones that are the likely to work the best. Travelers as well, not a good trade because of this, right? So I've limited it down basically to I think it was an LNTH. Yeah, out of those, that would be the one I look at Monday because this is so high. This is likely to go back to green. All right, and if I'm looking at the short, so we looked at GoDaddy right here. Yep, can I trade this short? I sure can. Notice there's some buying here, but notice this has gone to selling. This was already selling. The multi-time frame is bearish. The current time frame is bearish. The long-term trend is bearish. GDDY is, matter of fact, I'm putting it down on my list right now for shorts for Monday. This is a very nice short setup for Monday morning, assuming that it's red. You don't want to take it if it's bouncing, right? And the other one we looked at, there was a short, was Shell. Okay, whoops. There's Shell right there. Yep, you can go. And even though this is green, I would still take this short because these two are very red. These things are telling me there's really a lot of selling going on. These are the ones that I'm most interested in. Okay. All right. So that's how you use these Heiken-Ashi candles on your SPY super system. If you've got something that has a Heiken-Ashi reversal candle, you want to, on a swing trade, you want to make sure that it's bearish and bearish if you're going short. And I can do these on 5-minute charts as well. If I look for example, the SPY, all right, on let's take a look at Tesla. Tesla, this is on Friday. All right, so we go back and look at Tesla on Friday. Okay, so this is what happened Friday morning on Tesla. All right, now this is a trade I took on Friday on Tesla. As the stock price broke up above the VWAP right after the open, I took this here and I wrote it up here. All right, I took it right on this candle. So these are Heiken-Ashi candles. Remember, the flat bottom. This is a bullish trend. So I took it right in here about 451, and it ran up to 463. that is a huge number of, a huge amount of profits in calls on Tesla, right? And get up here, and as soon as it reverses, I'm out. Notice it went back to yellow here, right? And you can do this all day long on, for example, if you like to trade the SPY, we have a lot of folks in the room that use the SPY super system. This is what you'd be trading. You'd be trading off of your breakdowns of your indicators. See how it's breaking here, how it's yellow, and then it goes to blue, and then it goes to red as it breaks below this. This is called a pivot point. As it breaks below this pivot point and below the 8 and the VWAP, that's where you take the SPY short right there, and you write it down, and it stays red the whole way. But you're going to get out. It's coming back up to the 8, which is the white line. You're coming back up. You're out of it right there. Beautiful trade, right? So you can use these on intraday trades for anything you want. You can use them on the futures. You can use them on gold, silver, any kind of commodities. You would trade the SPY futures, sure. If you're going to trade the SPY futures, you would just switch this over to ES and trade it off the ES off of this. Let me go all the way back here to where we're getting back to Friday, right, on the futures, because futures keeps running. But here's the futures on Friday, and there it is Friday morning. There's your breakdown right there in futures as it breaks below the pivot point in the 8 exponential moving average. You just ride this thing right down. ES, NQ, you can use it for anything you want. Okay, so let me go back to the presentation. I think we've talked quite a bit about the Heiken-Ashi candles. I'm going to go over the results. I'm going to run through these. I'm not going to spend a huge amount of time on these, but I do want you to get a feel for what kind of profitability to expect in the trades and what kind of profitability not to expect in the trades. All right, so these are our trade results. This was in 2023. I've done it 2023, 2024, and up through September 2025. So if you took $2,000 in each trade we took in the Compass, which is now the SPY Super System room, it produced a little over 60,000 in profits, 5,000 a month basically. Using I won't even go over this. If you use $50,000 account, you'd be using 4% of the account for the 2,000 for your first trade, and at the end of the year, your amount of money put into each trade would have been down to 2% of your account. But it's all dependent on what you have for a balance. 2024, 2,000 in each trade produced about 55,000, slightly less, 4,500 a month. And it's important to understand that the profitability is more dependent on what the market's doing when you're making these trades. If you get choppy trades, your profits are going to be lower because you can't stay in trades as long. When you get a nice trending market, then they're going to be higher. All right, 2025. This is through September. Using 2,000 per trade, we're up 47,765, 5,300 a month, which is actually better than the previous 2 years, but not a lot, but pretty good. But you can see how consistent the profitability is on these trades. Even in whatever the market conditions, it doesn't matter. Market conditions right now, even though the market's very high, the trading conditions are horrible for swing trades right now. We can't take a lot, so I don't. All right, this is just, this was something that happened back in April when they put the tariffs on, took the tariffs off. We had 4 trades on. These were all in the room and on the alert service. These are the only trades we had on at the time. All right, so, and Broadcom, we get in for $75 a contract, and we get out for $1.04, $104. That was 39%. Nike, we get in at $285, get out at $9. This is a huge profit, very unusual. This is not normal, right? This is not normal. But we took Nike. They put the tariffs on. Nike was very bearish. They took the tariffs, put the tariffs on. They said they were going to put the tariffs on. Vietnam was going to get a 39% tariff. Guess where Nike makes all their products? In Vietnam. Thing tanked. So we were able to get out of there very, very quickly for a nice profit. Sarepta, about 78% profit, in at 450, out for 8, and NNE in for $1.80, out for 225. These were all bearish trades, and the only ones we had on, and this was our profit. Well, the market was down 10% in 2 days, if you remember back in last April. Okay, so this is fairly current stuff. This was June. I had just 10 wins and 1 loss, 91% win rate. I was on vacation for a couple of weeks, so I didn't take a lot of trades. You notice we do have losses. It's Sarepta, but these are the kind of percentage gains you're going to see: 20, 25, 30, up to 40, 50%. That's generally speaking what the profits will be per trade. This was July. I was back from vacation apparently, and we took a lot of trades in July. July we had 30 wins and 3 losses. That's a lot of trades. Probably the most we've taken in any one month this year. 91% win rate. This is very difficult to maintain 90% win rates. Really, really hard. But we had a good month. 2,000 invested in each trade, produced about $16,800 in profits if you took the trades we had in the room. Okay, this was August. Just kind of recap. We did 20 wins, 4 losses, 84% win rate. 2,000 invested, produced 5960. September, I listed the trades in here because I want you to see again the percentages. Right, a lot of 30s and 40% profits, 25% profits. Very consistent. And you can see we have losses. Important to understand, we do have losses, right? But September was 21 and 4, produced 47.44. January through September of this year, of 2025, 155 wins, 28 losses, 85% win rate. So not great, but pretty good for 85% win rate. When we're talking 90, doesn't sound good. 85% win rate to try to maintain is very difficult. And 2,000 invested each trade has produced 47,765, about $5,307 a month that I just talked about a little while earlier. All right, so there we are so far up to date. This is just from 2024, and the only reason I'm showing these right is I've had these on here for a long time. Is I want you just to see the percentage gains. This is normally what you're going to get, and the whole point of this is don't expect 200, 300, 400, 500% profits on trades. You can't do that consistently. You know, it's very difficult. There is no strategies that if you're taking those kind of risks that you're going to be able to produce consistent profits. You're going to end up losing money. What we're looking for here is grinding out nice 20, 30, 40% profits, trade after trade after trade, when the market allows us to. All right. So this was January. This was February. A big month here, $11,000 profit. Some losers. Again, 24 and 2, 92% win rate. The market was good. I mean, it's easy to trade that month. May, just kind of jumping ahead here. You see with these time spreads, these were trades that we took over earnings releases because there's a lot of earnings releases in May. 15 and 2 on alerted trades, and 29 and 7 on the trades we actually took in the room. Again, alert trades, fewer trades because I can only put swing type trades out there. This was the trading room, 29 and 7, $5,700. Is June, 25 and 4, 75.90, pretty nice, pretty good room, pretty good trades in the room, and the alerts actually made more that month. We had 14 and 1. That's just the way it worked out. That's pretty nice. July, again, 85% win rate, 75% in the room. August, 17 and 2 last August. This August of 2024, 89% win rate. Room, 89% win rate in the alert service. So we only had 9 trades alerted that month. Some months we'll only have 4 or 5 trades. Sometimes there'll be 10 or 15. It just depends on the market. All right, September last year. This I don't like to highlight it, but I do highlight this because this was a losing month. This is the only losing month we've had in I think 2.5 years. I think we had one other losing month in the last 4 years, but this was a losing month of September. 8 wins, 5 losses, 62% win rate. All right, I mean, for me, this is like embarrassing to get 62% win rate, but it is what it is. We had 8 and 5. We lost $1,786 in the room. We lost $295 in the alert service. That's what happens when you have a losing month sometimes. But again, if you look at August, in the room we had 4,500 profits, 1,700 down in September, and then October we jumped right back up to $7,400 in profits, and 6,000 in the room. This is September, and again you see the percentage gains, very, very consistent through all of these trades. There's November, and I'm going to go through each one of these. This is this year. This is just a kind of recap for January, February, March. You can see 84, 89, 83, 81. It stays right within that range. Now, on the alert service, just to see what the alerts are going to look like, what you're going to get is you're going to get this on this Nike trade, for example. This is what the original alert looked like. It has a date on it. It's got the instrument that we're taking, Nike. It's telling you to buy the April 11th 67 puts for $285. This tells you everything you need to know. April 11th is the expiration date. 67 puts is the strike price, and how much to pay for it, 285. This is what the whole first alert would have looked like. None of this other stuff would have been there. That's the alert. Then you would get another alert that shows this, followed by the sell order, so you know to put a sell order in for $9. And then we tell you when they close, they were sold for $9. You could actually get an additional alert here if I adjusted this 9 to 950 or down to 850, but in this case, we didn't have to alert. We didn't have to adjust it. Okay, how do we achieve these stunning results? I think we've covered most of this already. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We take trades when both of these are in our favor, allowing us to align our trades with the institutions and the market. Now, I will take trades that institutions are in if the market internals are neutral. As long as they're not against me, I'll take it. And how do we do it? Triple screen assessment of momentum, trend, also money flow. Momentum is the key thing that we look at. And momentum is measured a little differently than what you think. It just doesn't, just because the stock's putting in green candles doesn't mean it has momentum. Okay, so let's look at these charts again. You've seen this one before. Again, here's the market internals that I didn't show you. This is it's called the VOLD. This doesn't apply to the stock. This applies to all of New York Stock Exchange stock. What's the overall market doing right now? Market internals are going to tell us that. Again, here's the trade right here. Here's the 8 exponential moving average. Here's the 15. Here's the VWAP. Those are your 3 main indicators, or 3 main levels on your price action. Is current time frame momentum, multi-time frame momentum, and long-term trend. We've looked at a lot of those so far, right? So there is what it looks like, and this is what you're trading off of. You wouldn't be trading any kind of a swing trade here, and if you were going to take the SPY short, for example, right here, you'd have to wait for it to break below the VWAP, right? That would be one of the criteria that you need. If you buy the software, you also get that template, and you get this template. This template is just for intraday trades, for quick SPY super system trades, just trading the SPY, the Qs, the IWM, or any stock, but you're only going to be in it for a few candles. Then we take some of the other stuff off of here and just put in the current time frame momentum. That's all so you can flip these back and forth on your layout. This is for people who are just trading off the 5-minute. You don't need the other stuff. I mean, it doesn't matter to me. I can just focus on this, but if you're just doing that, it kind of makes the screen a little bit cleaner to see. All right, this was a trade we took in a Heiken-Ashi reversal back in February of last year. Again, this was the old one. I don't have the 8 on here, but notice the 15. Notice the breakdown right here below the 15 EMA. We actually took it right here as it compressed and broke down right there below the 15, and we rode this thing down. And I don't even know how far we took this trade, because this trade stayed below the 15 all this way down. The dotted line, these dots, that was called trend dots. I've taken those off of there. They really don't help anything. So that's been cleaned up. All right, this is just kind of a recap of the SPY super system trades. When I say SPY super system, I'm talking about trades that I've taken off the 5-minute chart, very quick trades, in and out very quickly. I can't post them. I can't really alert on them. I can tell you when I see one, but a lot of traders in the room trade during the day when we're waiting for swing trades to set up. They'll trade the SPY super system on the Qs, the IWM, the futures, whatever they want. And this is the results I had starting in July a year ago on the SPY super system trades. These are my results, because since I can't post them, I don't know what other people in the room got. I know there are people that trade it way more than I do, because I'm answering questions, I'm talking to traders, I'm posting charts, I'm doing a lot of stuff. They just focused on this, on the whatever particular indicator there, or whatever particular stock they're looking at. They trade the SPY, they just watch the SPY, and they'll just keep trading it. So 16-0 back there in July a year ago, 56, 6-2 in August. See, a lot of trades, but all of these were very profitable. And the thing with these is you're only going to have one trade on at a time. It's going to be very quick, and you're likely going to have to sit there and watch it, unless you put an OCO in. If you put a trailing stop and a trailing stop or a profit target and a loss target, and then you'll walk away from it. I typically watch them until the trade's over, because they don't last long. All right, November. This is just continuation. 55 and 4. These are very good trades, but again, they're very quick. You're very quick. So this was the last quarter of last year. The SPY super system trades, the ones that I call trading off the indicators, trading the SPY, the Q, the IWM, the futures. 33 wins and 4 losses is what I had. 89% win rate, up 48-31. These were the trades we took in the room. These are the ones that you would have taken if you're in the room. If you were in the room and you took all these trades, this is about what you would have made, 74.48. This is SPY super system trades. These are not related. This total is not included in here. This total is not included in here. These are completely separate methodologies. Okay, is that on futures? Yeah, what I took was on the SPYs, the Qs, the IWM, but the futures trades are going to be very similar. I mean, the SPY, the ES moves very closely to the SPY. You know, when you're trading futures, obviously you're trading leverage, and you can take options on the futures as well. But I didn't trade futures; these are right off the SPY, the Q, then IWM. But I have a lot of traders that actually do futures trading in the room. All right, this was November. Nice run rate. Again, nice month. December. And again, nice SPY super system trades and the room trades right here. Okay, so that was what the SPY super system did last year. I haven't gone and quantified it. It takes a long time to quantify all this stuff. All I know is I haven't had a losing month in this since I started it. And they're very specific. And I'll talk about them in the room. I mean, if I see one setting up, I will tell you. And if I do take one, I'll tell you that I am. Okay, so here's some SPY super system trades. Again, I'm just going to show you some more trades, and we're going to wrap this up. And again, notice the SPY super system trade 8/9/24. We get in right here. Notice that we went from red to blue. Current time frame momentum. Institutions selling, institutions buying. We buy it right here as it breaks above the VWAP and the 15, and we ride this thing up. This is a long trade. This is a 5-minute candlestick, but for a SPY super system trade, this is a long trade, and $220 profit per contract is a lot, right? Most of the trades I get, I usually make between $70 a contract and about $120, $130 a contract, because the trends don't last that long, you know. So you're in and out, right? But there is your 15 EMA right there. There's your 8 exponential moving average. Is not on here. No, I haven't got the 8 on this one. This was before I put the 8 on there. So when we get in here, we get above the VWAP, the 15 would become our stop. All right, this SPY super system trade here, in here, out here. See this selling? Boom, right here, breaking down with a pop out of the box below the 15. We take it right here, $90 profit. That's more reasonable right there for a trade. And this is the same thing on the modified layout with just the current time frame momentum and your indicators and your moving averages up here. Okay, this is again same thing, just using the new layout. Some of these things I put in here, I talked about when we put them out. You don't have to really spend a lot of time on them at this point. This was a nice SPY super system trade right here. Notice it's red. We wait for this compression break. You see how compression breaks right there. Drops below the VWAP, drops below the 15. We just follow this down. It flattens out. We get out right here. Goes back to blue right there. You got to be out of the trade before that. By that time. That's IWM. That's a lot of IWM. That's the Russell 2000, by the way. Hey, Kent. Thank you very much, Kenton. Yep, you'll get a recap. You get a replay of this, and you can touch base with Rory if you'd like. He'd be happy to talk to you. Okay, and these are some of the recent trades we took using these are swing type. These were meant to be swing type trades. This particular trade right here was going to be a swing trade on a line, but it worked so well. I took it off during the day. We get in right here. This is when we had alert on as well. We get in right here as it notice it went from green to yellow and broke below the VWAP. This is where we took it. It was a 5-minute alignment for a stock that was very bearish that day on the daily chart. So we took it, but it moved down so much that we get out right here. We were up 51% profit in an hour. And you know, I'm even though it was meant to be a swing trade, if I'm up 51% on a trade in an hour, I'm taking the money. I'm going to take the money. One of the things I mention in the room all the time is gaps are gifts. If you get into a trade that you're long and you get a gap up in the morning, you know, 3, 4, 5, 6% up in the morning, take the profits, right? Because you're gonna get the best profits at that point in time. Generally speaking, that's going to be your best exit. If you hang around and get greedy, the two things can happen. It can keep going up, but you have to remember that when a stock gaps up or gaps down, the implied volatility and the premium of the options goes way up, right? So if the stock gaps up and you take it off at 931 and the stock moves sideways for 10 minutes, if the price is still the same, the option price is going to drop because the implied volatility is going to come out of this. So you want to take it off right then. And the second reason you do it is because gap ups with continuations is the least likely thing for gap ups to do. Most of the time they'll gap up and chop sideways on gap and crap. They'll gap up and then they'll turn around and head back down again. You want to be out and they've taken your money. So how isn't that trading a P&L versus a setup still holds? Well, when I'm taking a trade off, right? Because what I'm talking about is if you're following your P&L and you're getting out because it's creating fear in you, right? I'm getting out of these trades because I'm getting close to, like, if it's a long trade, it's getting close to a support level, a resistance level, or the momentum is starting to fade on the chart, and the momentum is starting to be lost. I can look at that, but I can tell by looking at the candles. So I'm not really trading my P&L at that point. I'm trading off the technical setup, right? I'm trading as the stock gets close to resistance. Many trades I take as it gets close to a resistance level on the way up, I'm going to set a sell order in there to get it off right about then. Not because the P&L is where I want it to be, because the technicals are where I want them to be, right? So, and on the SPY super system trades, you've got to use your judgment as far as taking it off, right? You're looking at the technicals, but it's going to be quick, and you're going to usually have, like I usually put a sell order in there at a profit target and just leave it there and then just take it off. But the key here is I'm not actually making the trade or taking the trade off based on what my P&L says. It's not forcing me to take it off. I'm not exiting based on fear. I'm exiting based on technicals. Okay? It may sound like a subtle difference, but it's a big difference. Okay, so here's a couple more. This was a daily trade. This was a swing trade on URGN that we get in right here as it broke up above the 15. Didn't do much for about 3 or 4 days, and then it popped right here. And the indicators were telling us it was likely to pop. We don't know this for sure, but we had the institutions in here buying. We took it off right here. All right, and this is NVIDIA. I showed you this one before. This was a PBO, a pullback opportunity right here to the 15 and a bounce. Take it right here. There were institutions that were buying it, so we took advantage of that. SMIO, I've already shown you that one. Nike, this was the one we had. We took it here on the 28th. And it moved down pretty high, but notice the institutions were already selling the heck out of this thing all the way up through here. Here was their earnings, but we stayed in it. And this is where we get that big flush down when the market flushed that day because of the tariffs being mentioned. That the tariffs were going to go on. We get out right there on this open. It opened right there, and we get in right there. We get out right there, and it bounced the next day too, as a matter of fact. But we took a big huge profit in that. All right, this was Sarepta. That was another one we had that I mentioned. Notice how they're selling the heck out of this thing. Moves sideways and then breaks down. You take it right there and write it down. Again, the VWAP is not supposed to be on the daily trade chart. That needs to go away. This was a long trade in HIMS, 25% profit. Pretty nice move up in this one here. I actually left some trades on that I got a lot more premium for, but a lot more profit. But I didn't include any of that in the results that I had. I put that in as a 25% winner. All right, so those are the charts. We're going to just wrap it up here. Here is the strategies we use. Straight calls and puts, straddles and strangles, non-directional, debit spreads, time spreads, non-directional over earnings. We'll have earnings coming out starting in January again. We'll start to get a lot of earnings. So we do a lot of these time spreads during earnings season. Weekly ATM, which I've mentioned to you before, this is a very effective strategy if you've got the correct criteria and the correct setups. Stock selection is critical. It's very critical. Credit spreads, and then of course the SPY super system. All right, so that kind of wraps up what I want to talk about today. I'm going to show you what the specials are that on the option rooms and the text alert service. Pretty good deals here right now, excellent deals. This you can get a free 2-week trial where you get the text alerts and you'll get the live trading room access. I don't think I've even had it. I've probably only had two or three text alerts all month so far. We haven't had, this market's just not been conducive to swing trading. And it's important to understand that, to my way of thinking, if I can keep people out of trades when they shouldn't be trading because the market is not conducive to it, to me, that's just as good as getting a winning trade. It's keeping you away from some losing trades. You're going to get the text alerts. You're going to get the live trading room, which I'm in every day. I'm in there from market open to market close. I take about an hour for lunch, but I'm in there answering questions. Showing what you'll see all day long will be the SPY super system displayed in the screen. You can ask for any particular stocks. I'll bring them up, and you can see them there. We'll talk about technical setups and whether a trade is a good trade or a bad trade. People feed me different trades that they like all day long, and we'll talk about whether that's a good setup or a bad setup. I've got a lot of really good traders in the room now who come up with a lot of trades, and a lot of the trades we take now are from other members who have been doing this for a good long time and are excellent at this. Okay, and you'll be able to look at all the videos. I got about 31 videos on the indicators, the strategies, on all the strategies and how to use them. Okay, then it rolls over to $3.96 a quarter after the 2-week trial. If you can cancel it, obviously, anytime before the 2 weeks are up. The annual deal, this is price-wise, this is much, much better, obviously. You get the text alert service, you get the trading room access, you get the modules here, that basically the videos, training videos. You also get access to, we have a private Discord chat access. We've got 2 other professional traders in there who are also posting information all day long, and you can talk to them and hear them, and you can get on an audio with them if you want to. And that's $11.95 for a whole year for the alert service and the room. And you saw what we were getting for results, so it's pretty good. One-time payment, this if you just want to get the whole thing and never have to deal with it again, $24.96. Get the text alerts, the trading room, the training modules, and the Discord for $24.96 forever. All right. Now for the SPY super system, so this is the software. Right, the software is a little different here. The software, you have an annual membership for the software. That gets you the SPY super system software. It gives you a month of in the trading room. It gives us, you get the scanners. I didn't go into a lot of detail about the scanners that come with the SPY super system on Thinkorswim. You get the videos, wise way to trade options, and you get an installation, a white glove installation. Rightline will take you over your machine and they'll put it on Thinkorswim or Ninja. If you have Ninja, they'll put it on Ninja, but it goes on Thinkorswim. You don't have to deal with it. You don't have to pay for Thinkorswim. You just pay for the software. They'll install it on there, and it's going to look exactly like mine, right? Or you can do the one-time payment. This is you get the SPY Super System software forever, lifetime access, and you get lifetime access to the trading room as well. By the way, if you do this, the one-time payment for the software, you actually get into the room forever. So you're getting the room for free, which is actually pretty good. And you get the scanners, and you get the the master classes, all of the videos I did, as well as the white glove installation, or the Rightline will put that on your machines. You don't have to worry about any technicals with that stuff. All right, so those are the deals right there. Those are these offers that we've got. I did create this. This is a return on a subscription investment. I kind of wanted to show the annual subscription. The most you can pay is $1,600 if you take 4 quarters, right? So that's your max annual price. And what I did was I took the average trade size of 2,000. This is you're taking all the trades in the room, and what the results we've been getting. This is after each year is 40 times ROI. So you're getting 40 times your subscription price in the profits if you take all the trades, right? 40x ROI. This is pretty impressive to me. And so the extra subscription costs, and so obviously the subscription is consistently paid for itself many times over, and it's got a high return on investment. This is simple math here, proven results, and the usual disclaimer: past performance is not indicative of future results. Trading involves risk, and individual results may vary. But this is what we've been able to do, and you have to remember that if you're in for a short period of time and you get a trade and it's a bad trade. I mean, I get people all the time that they get in and they get 1 or 2 trades and one of them doesn't work, and they get disgruntled and they leave, right? But this is a methodology that's been proven over 4 years, over hundreds and hundreds and hundreds of trades. And if you're making decisions based on one bad trade somewhere along the line, I probably don't even come here. That's what I would say. This is a proven system. You need to give it some time. I think a month is at least what you need. At least a month of this to see where you are. All right. Thank you very much, everybody. I appreciate it. In the chat box, that Rory put up here will be a link to the SPY Super System and the scanners, and as well as the rooms, the live trading room, what we've got right here, 2-week trial, the annual, and the one time. You can get any of those, and you can call Rory and talk to him about this, 786-732-4656. He'll answer any questions you have about, maybe you have some questions about any of these memberships, maybe you want to make an adjustment or whatever, but you just talk to him about it and he'll be happy to talk to you about it. All right. So listen, thank you everybody for being here today. I appreciate it. Enjoy your weekend. Coming up on Christmas here in a couple of weeks, so market's going to slow down a little bit week after next. And if the market has been pretty wild here lately, so I'm sure if you trade, you know exactly how volatile this market has been and how tough it is to trade swing trades right now. All right, everybody, have a great weekend. We'll see, hopefully to see some folks back in here on Monday. Have a good one.